Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. Joining me on the show today to talk about the markets and the broader signals that we seem to be getting from the political economy front is one of India's best known market veterans, Samir Arora, the founder of Helios Capital. Samir, welcome to the show. Before I come to you, I want to do a quick check on the markets and some news, source-based news that is coming in at this moment. It is now being suggested by a variety of sources that India has struck back after Pakistani missile debris was found in Amritsar overnight, and reports suggesting, sources suggesting that as many as a dozen drone attacks have happened. Air defense system, air defense capabilities of Pakistan have been struck in Lahore. Those are details that are just emerging at this stage, viewers. Source-based, no official announcement, but from the Pakistani side, confirmation a little while ago about what they are claiming to be drone attacks on military installations within Pakistan. The Pakistani stock exchange, earlier known as the Karachi Stock Exchange, trading was halted after the stocks took a beating. There on your screen, the KSE 30 down almost 8.5%, and clearly coming under pressure on account of the escalation that seems to be panning out after India's first round of strikes. The Indian markets at this stage, like we saw yesterday, shrugging off this. Clearly, investors of all sizes and shapes, taking into account the vast differential between India's economy, our markets, as well as Pakistan. You see a bit of the red on the screen, but nothing like the meltdown and the crash that has been witnessed in the Pakistan stock market. Very clearly a fraction of what we are. But while some sentiment may be driven and a response on account of emerging political developments on this front, let me come to Samir and focus on the big picture. Samir, thanks very much for making time, because a lot of investors, both of the retail kind as well as the institutional kind, are looking at the aftermath of Operation Sindoor. I want to begin by asking you, this is not the first time that Pakistan and Pakistani-backed terrorists have attacked India. That's a story of 3.5 decades. The markets have also seen these attacks and very gruesome ones. Tell us, in terms of your own historical understanding, what is this moment from a broader markets point of view?
So first thing is, of course, this time and even last two times, I think Balakot and before that, the Indian government has responded. And then I guess in both the cases, the Pakistanis also responded a little bit and escalated it. But after that sort of first round of escalation, which was simultaneously followed with de-escalation in terms of saying that this is it, that we had hit only terrorist targets and not military and not economic or whatever, the thing died away. Now, this time, the only new thing which has happened now is that there is like a second round, because they responded maybe, wherever you're saying Amritsar or wherever. So that is somewhat new. And that will create some nervousness if you say that we are hitting, even though they are military targets in Lahore, then what will they do? So, this uncertainty continues. But the general model so far of escalation was that India reacts, and this time they reacted strongly and demonstrated that what all destruction they have caused in terms of infrastructure of the terrorists or whatever, and then they have responded. But then the second round makes it a little bit of an open-ended, and we hope that maybe another round happens, and then slowly there is some discussion, some recognition that India will now do maybe in future preemptive, not wait for any incident. but whenever it sees something, they will do. But in general, the in the previous times, despite the tragedies and the loss of lives, the market has, after 1 or 2 days here or there, actually moved on, maybe thinking that this was as bad as it gets, and then sort of moves on. So I had in the morning and even till now have the same thing from us as a fund manager, that plus minus 1 or 2 days here or there, that the market will discount this, and it doesn't become much worse from here.
Before I move on, just one more point, and this is because the questions that we have gotten since yesterday uh, are basically around how to deal with this risk. That is what investors are asking us. And I want to pick up that with you. But one quick follow up point to what you just said. You know, historically, if we see, regardless of the conflicts, the long term economic growth trajectory and the story of our markets has never gotten derailed. You believe that will continue to hold should this conflict worsen?
If this conflict worsens, you don't know how far it goes. And although in the long run, you can find even big wars being, mere dots on a, say, a 10-year, 20-year chart. But when you're in the middle of that, it does look scary. So you can't say that if somebody really believes that this war is becoming much worse, then obviously that is a different level of nervousness. Even though you might say, if you look at back over 5 years and 3 years, it would not look anything significant. But let's not go that far. As of now, the idea is that controlling that, as in that it ends in a few days and a stronger message is given, and maybe US intervenes or somebody that sort of calms down the Pakistani, saying don't make it a double kind of thing. That India was in a very, very sweet spot and is in a very, very sweet spot. In terms of the issues related to trade and what President Trump is doing. But secondly, just from this big picture view that I have, that the world is very, very much over invested in the US. And there is clear recognition that that is unsustainable for various reasons. But the big picture is that the world has about 70% of its assets, equity assets in US, if we take it in line with the index, the MSCI World Index. And normally the longer term historical average may be more like in the 50s. And this difference is something like $20 trillion that the foreign investors have extra in US. And the theory going around, or the thumb rule going around, is that the since the rest of the world is doing well now, and that people feel that you can't put everything to the whims and fancies of what is happening in US and the dollar weakness, that some of that money will leave. Even if US otherwise solves some of this uncertainty, reduces some of this uncertainty. And therefore, you can see that even yesterday, India got, and in the last 15 days, maybe they've got $5 billion. And in the last 2 years, the issue was that the foreigners were selling and mutual funds, domestic guys were buying. Imagine if both want to buy. But now, because of this thing on India, Pakistan, maybe, these things, maybe somebody will wait a day here, a day there. But we can't imagine that this war is becoming very serious and still people will invest. Then obviously there'll be a pause. But mostly, I still don't think that that is the case. I am not reacting today to anything.
That's a very good point. Several points that you've given me to follow up on. I want to start with the first one because that is what a bulk of the questions since yesterday have been asking. Investors saying, what should we do? And ask a market guru, market master like Samir Arora, should we adopt a knee-jerk kind of approach, or is this time to remain steady with your current portfolio? What would you say
Oh, by the way,
to? Yeah.
yesterday we actually bought, thinking that,
Okay, that
thinking
answers the
that,
question.
no, yesterday. But you see, I didn't know this sector. Normal, my sort of framework was that India has to respond. That was given
Yeah.
because of having done it twice before, and the Prime Minister being very clear. But that you will do an aggressive thing. But in that, along with that attack, or whatever is the word, of those 9 places, there was like a press release or whatever it's called, saying that we have not attacked your military targets, we have not attacked economic sensitive targets, we have not tried to hit civilian population. It is terrorist infrastructure, which means you're in a sense responding strongly, but also simultaneously saying, don't come back because we have some justification for this. But the normal response we know of any country and of so Pakistan is that they would respond, but then they are supposed to end somewhere where they can also say some story and basically feel happy that they have responded. But then, sort of the next round is more of everybody calming down or intervention by somebody. But now here there's a second round, so that is a new angle today. Otherwise, I would have said it's to be bought. We bought yesterday. No, anyway, we in one day are not going to change. We had some cash in our long only fund, so we bought. And because the backdrop was and is that India is relatively first a big beneficiary of these other issues which are related to US and Trump and our relative this thing advantage little bit now over China in terms of tariffs that may come up in the end. Right now, of course, the difference is very big. But even after some deal, we expect maybe China will have 40-50% tariff. And if we have 0 to 10, maybe we'll have 10, then that is a big advantage. And plus, again, there also, even if the tariff was not so different, the world will want to diversify, world will want to have more than one source because it would still be unpredictable what
Right.
happens,
Samir, we now have an official statement which I want to take forward. The Press Information Bureau of India has just put out a statement, and this has been posted minutes ago, and it says, and I'm going to read, Pakistan's bid to escalate negated proportionate response by India. That's the headline. It goes on to talk about Sindoor and how India had called its response as a focused, measured and non-escalatory. It goes on to say on the night of 7th, 8th May, Pakistan attempted to engage a number of military targets in northern and western India, including Avantipura in Kashmir Valley, Srinagar, again in the valley, Jammu, Pathankot, Amritsar, Kapurthala, Jalandhar, Ludhiana, Adampur, Bhatinda, Chandigarh, Nal, Falodi, Uttarlai and Bhuj using drones and missiles. So, viewers, the government of India is now for the first time officially saying that Pakistan's retaliation on military targets stretched from Kashmir, Jammu, down through Punjab to Rajasthan and even Bhuj way down. So the entire northwestern front and of course the north beginning from Srinagar. It says that Pakistan used drones and missiles in these attempted attacks. These were neutralized by the integrated counter UAS grid and air defense systems of India. The debris of these attacks is now being recovered from a number of locations that prove the Pakistani attacks. Today morning, Indian Armed Forces targeted air defense radars and systems at a number of locations in Pakistan. The Indian response has been in the same domain with the same intensity as Pakistan. It has been reliably learned that an air defense system at Lahore has been neutralized. Pakistan has increased the intensity of its unprovoked firing across the LOC using mortars and heavy caliber artillery in areas in the Kashmir Valley, Kupwara, Baramulla, Uri, in Poonch division, Mendar and Rajouri in the Jammu division. 16 innocent lives have been lost. Here too, India has been compelled to respond proportionately with mortar and artillery fire. And finally, Indian Armed Forces reiterate their commitment to non-escalation provided it is respected by the Pakistan military. So let's try and bring up our market indices on the screen as I go to Samir to try and take this a bit forward, because the broader conversation of how to risk proof your portfolio. So there you have it. The Nifty down about 90 points. I would still argue that the market's taking it a bit in their stride, not the kind of panic reaction that we have witnessed on the Pakistan Stock Exchange. But Samir, since you have
So that is
already
the whole point.
spoken about it, go ahead.
So the point is that we, even me and the market itself, are also at the back of the mind thinking that since India is simultaneously saying we want to stop, but they have responded, and now again India is saying that we are only doing proportionate. That at some point soon, the Pakistanis, either on their own or because of Western pressure or whoever can put pressure on them, say that okay, we have done this, and therefore we have also done our proportionate response. Because in the end, both the sides will have to justify, and particularly Pakistan now to their own side, that okay, we have not conceded so easily, whatever be their thinking. But as of now, the assumption is, and the hope is, and the belief is, and the prayers are that this round of escalation does not go open-ended. So that's why, as of now, the market is okay. Because if it is at any point today, tomorrow, whenever, then the market can recover some of this ground, because the rest of the things are going in India's favor in
Okay.
terms of economic and other things. Yeah.
Fair point. And you spoke about the sweet spot and things going in India's favor. And let's try and bring the focus of this conversation for the viewers on the sweet spot. Samir, in terms of not the specifics and the deals that we have done as part of the UK trade deal, but at a broader level, what does it represent as far as India's openness to trade and re-engagement after almost 10 years of following a slightly different strategy?
Very good. So whether we wanted it or not, now we have got reforms of a new round, and you needed a trigger, and that trigger came through all this US this thing. So now, of course, to even demonstrate to US that there are other deals to be done, the UK deal was accelerated, and in general, if we are also early in the deal with the US, then you are sort of back to a relative advantage over other countries, but particularly over China. But as I said, now those things also don't matter. Even if you're on par with everybody else as far as the US is concerned, which is the biggest market, the the supply chain will naturally diversify, I think, because there will always be this risk that what if after 3 months US feels that, oh, China has not conceded on this, or not conceded, but is backtracking on something, and then they put new tariffs. Then the customer feels, oh my God, why didn't I to use this time to diversify? Basically, you had this first round of urge to find China plus one during COVID or post-COVID, because oh, what if one city is locked down and I have everything in one country, one city, and then it happened. But then maybe there was a little bit of, when the event is over, you say, okay, anyway, I'm doing what I am, and so now this is second round of external pressure that has come to diversify away from China, and this time India is more ready, and India is more because of in between what we had done with PLI and others. So we can raise our hand to say that we can do the electronics. And now with the India, UK, we can do the textiles and stuff like that. So this is
So,
all
Samir,
good.
which are the likely winners from what I am terming as the trade winners on account of our free trade deal? Are there
Yeah.
any
So
new winners
one
that
is
you can
obvious.
scratch out?
One is very obvious, which is the textile. So yesterday we heard this Gokul Das guy just telling big picture numbers that Bangladesh is exporting some $4 billion of textile to UK, and China is doing I think 5 or 5.5, and India is doing 1.5. So now with India benefiting in terms of having the same tariff as Bangladesh, which is zero, and a 12% or so advantage over China, there's no reason why with that 12% differential, you can't increase your market share very easily. So textile is one. In some of the other areas like this liquor and all with UK, it's okay. It's not a very big deal, but some of these you can get Johnny Walker Black Label cheaply a little bit. and a little bit might be the car guys that you might want to buy imported cars if the prices are, of course, they'll be still higher than the Indian cars, but you will be getting. So that is not big. I think the big thing is more the macro backdrop, which is that if these assembly type jobs and other jobs come to India, it's not necessarily like suppose Apple is coming and say we are making all the. It does not directly help any listed stock as such, but it provides a backdrop because there are jobs of assembly, there are jobs to women. These are jobs maybe paying 30,000 a month or whatever, and therefore it helps the overall consumer. But more than that, you are using the demographic, this thing. So it has other advantages which indirectly help the stock market, consumption, and consumer. But not every fellow coming to India means he's going to come through a listed company.
Yeah.
But it's still very, very good. It's still needed. Otherwise, you can't have these high valuations of a market and things if you are not always able to say that the economy will continue to grow, that demographic will be a positive, not a negative. So, from every annually and foreign exchange. So from all those angles, it's a positive. Not literally that one stock I will buy in response to this, other than textile, which is too direct.
Absolutely. Uh, you know, what about the defense sector? Not in the context of the trade deal,
But
but
otherwise, from them.
yeah, there's been a strong rebound after quite a steep correction. What's your view there?
I agree with that also a little bit, although we don't have much. But I think defense spending will go up anyway. Worldwide defense spending is going up because US also forced the Europeans to step up and increase your share in NATO and other things. And yesterday Trump told Kani that we are defending you, we are spending money on you. So everybody will want to spend their own money so that they are not at the whims and fancy of US suddenly deciding that I am no longer responsible or morally responsible. So that will happen. And in that sense, yes, in India also it should do well. We don't have much, but it can happen. Yeah.
The other sector
So,
that's
although they have, all these stocks have gone up from the bottom, if you
yeah,
look at it from a year to date, they don't look as if you have missed it. They are up 5-7%. They first
yes.
fell 20-30% and then are up 30. But if you just say, okay, who cares what happened 1 month ago? But if I look at 3-4 months, you don't feel that you have missed, or people will be able to rationalize buying them if they want to buy.
Let's try and bring that up on the screen. I'll request my producers year to date for defense stocks. But another sector that's played a significant role in the recovery from the March lows is the BFSI sector. And we've seen recent earnings. Do they give you more confidence about that sector?
Actually, BFSI we are most bullish on. One, of course, this sector had not done well previously as much, but now if, and this is my big bet, that foreigners will come back in full force now, maybe for 2 days, 4 days they get this thing in terms of India pack, but otherwise, then it's their main preference. It's their main historical love is for this thing. Second is if you have to invest in India as a foreign investor, what will you buy? You will not buy IT as much, I think, because anyway, in theory, if this is what is happening, that you are reducing your weight in US to come to other markets, then what is the point of buying a sector which is connected to that same market? And secondly, you have bought the original better quality IT companies there you can buy. Why would you, in theory, sell them to buy our lower growth, higher valuation Indian IT? So, and big picture, we know historically they own a lot of BFSI. So if they come back, that will be their natural first this thing. One reason why this sector did badly was because these guys sold a lot of BFSI over the last 2-3 years. And also the earnings have been okay for the bigger banks, for the bigger NBFCs and all that. So yeah, it's a very reasonably easy sector to justify for the new money coming in.
We have Bajaj Finserv right there on the screen. One of the other sectors, and this has been spoken about, pretty much every quarter, these are consumption stocks. Regardless of a war or a COVID-like pandemic, consumption has to happen. It's only the volume and the margins for companies thereof. What's your view on that sector?
So we don't like consumer, the obvious large consumer staple or the non-durable. Basically, there are too many companies trying to do this from outside the listed space. For example, let's say you want to buy AC. Now you think, oh, there's only one Voltas or Blue Star, but there are 10 unlisted guys which you don't relate to if you are, not doing proper sort of industry study. Same thing in consumer. First of all, the consumer companies, we know the growth rate that they are talking about is 2% and 3%, and at 4% they look as if they are really doing well. And then there are so many of these unlisted companies and smaller companies attacking the niche areas, but ultimately taking away market share from the bigger established players who are too big to aggressively change product launches and new areas. So in the consumer sector broadly, we have liked the food delivery guy, and we like basically hotels and airlines and stuff like that, because that is still, travel is still a growth area, and there foreigners have still not come in. So for example, in smaller places where previously the foreigner would have been still 40%, I mean smaller but tourist locations. Now they say that the domestic tourist is about 80%, foreigner less than 20. And over time, that also, if it has to go back with the foreigners' interest, then both wanting to travel, just like we say, both wanting to buy stocks, is the scenario we could be seeing.
Okay, between now and let's say the second quarter earnings season, I'm taking a slightly more long-term view than the immediate. What will be a key driver for both market momentum and sentiment beyond the near-term, short-term volatility?
So when we say we are positive, we don't think the market is going to give some great returns beyond, like 10, 15%. Reason being, we are excited right now that we are not falling, that we are not going to be like January, and that you will make some positive return. But if those returns come too soon, then suddenly everything will look very expensive and overdone and stuff like that. Right now, the world also is not looking some great world, but basically because the US is not looking great. So if India can offer steady returns, but those are maybe 10% or 12% in a year in rupee terms, the world will pile on. And that is why the world is piling on. But if you go up too much too fast, then again after 3 months they'll say, oh, these valuations have become too high. So from that angle also, the BFSI looks a little better, because the BFSI valuations have not gone up as the other sectors have gone up. And the FII is comfortable with it because that is where they already had and have a lot, and they have sold maybe at similar prices, or at least not lost so much in selling first and now wanting to buy it back. Like if you buy back HDFC Bank or Bajaj Finance, you're not going to feel, oh my God, because in between these guys did quite badly, you can say, and therefore it's easier for somebody to buy back if they are back. But generally, we are not expecting some dramatic returns this year, because anyway, so much uncertainty, you can't make dramatic returns. But as long as you're making positive return and better than other markets and better than alternative things that you can do with that money, even though it is not 20% or something, it's okay for now, for 6, 9 months.
Samir, I know some bit of our time today has gone into reacting to some emerging news, but just a couple of more points to get your views on. One, the rather sharp and sudden appreciation in the rupee, and we spoke about the impact of trade on our certain sectors, but does the rupee and the recent moves pose risk of some sorts for export oriented or the commodity sector?
For IT, for sure, and actually for everything, yes. Because the thing is, this is the whole story why the US overexposure of the world into US is making them nervous, because they are losing on currency, and in general they also know that maybe collectively overdid it. Right now, because we don't normally buy commodity stocks, so we don't overly focus. But this will be across countries. It's not that only Indian rupee is strengthening. If you see other country currencies have also strengthened. So once dollar is weakening, broadly it's weakening against everybody. So on a relative sense, maybe it doesn't matter so much.
Okay.
Uh, but in absolute, it will of course matter. Yeah.
Okay. Finally, I want you to sort of give a sense to our viewers uh, for the upcoming quarters based on the recent management commentary. You cited the example of Gokul Das. What is your expectation for the remaining uh, couple of quarters or the upcoming couple of quarters?
So in aggregate, nothing great, maybe 5-6%. But financial sector, we would saying between 12-14% kind of growth. And in IT and all, they themselves are guiding 0 to 1, 0 to 2%. So nothing much is happening on a quarter to quarter basis. As I said, this year is you are going to retrace if everything else is ceteris paribus okay. You're going to retrace some of it just because of flows, and then within that, at that market, aggregate numbers may not be good, but people will find. So my thinking is that the foreign investor will buy the large caps and the domestic investor will buy the mid and small, and therefore actually the market will be good. Always this thing about India pack or any war kind of thing is always unaccounted for in such hopes.
Absolutely. And one quick final point, Samir, before I let you go. Overnight, we have seen what the Federal Reserve has done, a status quo.
Status quo.
How do you interpret and see its impact, particularly also in the context of the way the RBI has moved and what could possibly be its future policy moves, given what the Fed has said?
So I heard the full press conference of Federal Reserve Chairman, and basically he was saying that both the things are uncertain. That based on tariffs, whether the inflation will go up or whether because of economic slowdown the jobs will fall, because he has this dual responsibility of full employment and inflation. So he said, I don't even know which side things will happen. Will the inflation go up because of tariff, or will jobs fall because of slowdown? So whether I should increase or reduce also, I don't know. But he said, I have time. In India, I think we can continue to have measured small cuts as we go. Also, the liquidity has been increased, or at least is being compensated for, where the liquidity is becoming tight because we sold dollars, this, that. So all that you are trying to keep an eye on it. And India main thing is on the financial sector and in general is that all the uh, agencies are talking about reducing regulations and counting the cost of regulation and not just announcing. SEBI chairman is saying, I don't want to micromanage.
Right.
RBI is saying about banks that we don't want to push this and that. So they're all acting a little bit, pro economy, pro market in terms of not imposing new regulations and, without counting how difficult these things make businesses.
Okay, Samir, as I thank you for your time today, and this is a conversation where news flow has interrupted, so allow me to
Even I have to see my market, how it is doing. Well,
just
so far, so it's okay.
a
The
bit of
currency
red.
is going.
Yeah,
Currency is down
yeah.
1%.
Yes. Okay, that's important to bring up. But
Market not so much.
we can now tell you, viewers, and this is a India Today group exclusive, the S-400 Sudarshan Chakra system being used by the Indian Air Force, and that's first. Uh, and it was used against targets moving towards India yesterday night. The Indian Air Force S-400 Sudarshan Chakra air defense missile system were fired last night against targets moving towards India. The targets were successfully neutralized in the operation. There is footage also that is available, but just to tell you, viewers, the S-400 system has been utilized in defense, and that clearly another first in the current conflict, step by step. And there you have that visual very clearly, that bright red spot that you see, S-400 battery being deployed and being utilized to neutralize Pakistani attacks, Pakistani missiles that were trying to target India. So that's those are very, very dramatic and very, very important visuals, viewers, that I end this episode of Easynomics on, because this is clearly the first time this state-of-art defense system has been deployed and used in a conflict situation. Viewers, we'll pause at this stage and hand it over to my colleagues to continue with the market closing show. If you've been watching, thank you very much. We slip into a short break and come back just in a few minutes.
My absolute pleasure to welcome Sudhir Sitapati, the MD of Godrej Consumer Products. Sudhir, thanks very much for your time.
Thanks, Vishnu.
I've spent a bit of time reading up on the annual report for FY24, and what came out